Hey, it's Clay Trader, and this will be a video chart on the S&P 500. It is 3:53 p.m. Eastern Time. We have 7 minutes left, and you are seeing this candle here, and the chart is just really breaking down and looking ugly. So to show this, I want to go to the 5 minute, and as you can see right here, at about 325 or so, 330, the bottom just fell out and basically straight down. The Dow Jones is doing the same thing, but real nasty move here. And just a quick lesson that I wanted to do, and I saw a present or an opportunity present itself. But if you're a short-term swing trader or day trader, this is exactly why in this day and age with the market, you should always be locking in some profits. Sure, things were looking good the majority of the day, and once again, this is the 5 minute chart. So I should explain that each one of these bars represents 5 minutes worth of time. But looking at kind of the overall picture of today, we had the big move up here, and then we're kind of just chopping the rest of the day. But this is why you want to take profits. I mean, people I'm sure had gone up and gotten nice profits and were in the green and just waiting. But if you had not locked anything on, in, you're pretty much done for the day, and you've had everything wiped away. Like I said, this little lesson is more geared towards day traders and short-term swing traders. But it's just one of these things where the market just acts so weird in the mornings and during the last half an hour or so. And this is just one of the more recent examples of how had you not locked in any profits, everything is basically gone for the day now after this move here. So let's continue on till tomorrow. We will see. I see on the 5 minute we have the 200 period simple moving average right here. But I did want to just point that out and show that how quickly things can really just go against you. I mean, things were looking pretty mild after the big move up this morning, and then things just went down the toilet here. So 5 minutes left in the day. I don't think there's going to be any sort of recovery. If anything, maybe we'll keep heading down. But just a real strange day. Going back to the daily, it's looking like it is now red on the day. So just pretty crazy action. Real quick, I'm just going to go over the daily chart here. Not going to spend too much time on it because it's pretty much mimicking the Dow Jones, which I've been following pretty closely and doing videos on. So a lot of this will kind of be probably myself repeating things that I've already said. But nonetheless, I've had a few requests for the S&P 500, so I thought, hey, why not? Just get it up here. So the one thing that I noticed today, and which is kind of the trend right now that needs to be broken, is this red line right here. This is the 10-day simple moving average, and you can see that since about 10:24 or so, the price fell below it, and now has been having trouble getting back above it. Today it was above it for a real short amount of time, but as you can see, by the end of the day, it was knocked back down, and that is the short-term battleground that we need to get above. The other thing that we need to be careful of is looking right here at this purple line, which is the 50-day simple moving average. This is always a big psychological one. Here you can see that we had a nice bounce off it earlier, but now we're starting to hover around it. We're still kind of within this little web area here, but the more we're below it, that's kind of the more and more bearish it becomes. It's fine to drop below it like it did here, but as you can see, the past 2 days, it hovered around it, and then today, we got above it intraday, but it doesn't look like we're going to be closing above it. So that's one thing that you really need to keep your eyes close on is, where are we at in regard to this 50-day? Because if you do fail, let's take a look at the last time the price fell below it. Here the price fell below it and had a pretty sharp drop in a short amount of time. Luckily it did recover, but here was the other time where the price basically fell below it, and that's where things got real nasty. But since March, when the market started to bounce, we've only been below it not too often, and when we were we got headed we headed back up pretty soon. Here we actually bounced off the 200-day, which is that orange line. But at this point in time, there's big separation. So if we start to separate even further from this purple line, at this point in time now, the 200 is not until way down here. And, needless to say, that's a pretty far drop. So that's really the key thing right now in the short term that we'll want to watch for the S&P is how it reacts around this 50, and making sure that we don't separate too far from it. And then, as mentioned, we also need to keep our eye on the red line there, which is the 10-day simple moving average. We want to get above that. Not only do we want to get above it, we want to close above it and get a few consecutive days to close above that. So that's where we are right now. Real quick, a little short-term support is basically the low down here. You can see that we had a high here, had the price hang around it, and then had a low bounce off it. So if we fall down and this 10-day pushes us down, we do have this area here, and then from there we have some other ones down here. So the good news is the path of least resistance is still upwards. We have much more supports below us than really we have resistances, but in the short term, no doubt about it, we're in a downtrend, and that can clearly just be seen by the 10-day. And keyword there, short term. Short term meaning right here about the last month or so, or a few weeks. It has been trending downwards a little bit, but long term, still clearly up, as you can see by the increasing 50 and 200-day simple moving average. So it's all just a matter of what you want to define things as. So we'll just have to wait and see what happens the remainder of this week, tomorrow and then Friday. But overall, the daily chart hanging in there, definitely in a little miniature pullback here, and we'll just have to see if this is just going to be another one of these temporary pullbacks, or if there's a little bit more bearish pressure behind it than these past 3 or 4 times. So if you have any other questions on the chart, please shoot me a message, and I'll do my best to help you out. I'd also encourage you to check out bullmarketnewsletter.net. If you go there and sign up for the newsletter, you'll be sent a free ebook, which has been getting very good reviews. And with your subscription, you'll get chart setups, trade ideas, educational pieces, all sorts of things from penny stocks up to big boards. So there's a good variety, no strings attached. It's all free, so you really got nothing to lose. So I'd encourage you to check it out. One more time, this was the S&P 500. Thanks for listening.